Hello, everybody. Welcome to another episode of Simply Bitcoin IRL. I'm extremely excited for this episode. I think this is round 2 of having these two macro heavyweight legends of Bitcoin Twitter come together and joining us on the show. And of course, I'm speaking about the one, the only Greg Foss and the one, the only James Lavish. But before we jump into the show, I want to give a quick shout out to the Bitcoin company that makes this show possible, Swan Bitcoin. Best place to build your Bitcoin stack. It's being built by Bitcoiners. It's for Bitcoiners. They incentivize you to dollar cost average. They also incentivize you to take self-custody. If you haven't already done so, visit Swan Bitcoin today. All right, guys, no more delay. I want to bring up these two legends on stage. How you doing, gentlemen?
How are you, Nico? Good to see you.
Likewise, likewise.
Great.
I've seen this guy already this morning on the call, so
we're getting our quota in. Actually, I was told Udi was supposed to be on. I didn't realize it was James Lavish. I thought it was Udi.
I switched it up.
Okay.
You would have canceled.
Greg would have just dropped off.
The guys are egging me on to do the hockey barn thing again. So no, I don't think I'll do that.
Oh man. Well, gentlemen, I'm really excited to have you guys on the show. Normally, I would ask some of my questions, but I actually had some fans that had questions for you two. So, first one is from a buddy of mine, Hurley. It said RFK recently revealed at the Heal the Divide Pack event his vision for returning to a hard currency standard in the U.S. He said his plan would be to start gradually backing the US dollar with hard currency like gold, platinum, and Bitcoin. What are your thoughts on this kind of narrative seeping into the mainstream? And what do you think his chances are of being successful implementing this in the election? And I just want to kind of add to that as well. I think he said that he would take away capital gains tax for Bitcoin also. So it was a very big announcement. Of course, as a Bitcoiner, I'm skeptical of politicians, but I'm very curious. What do your guys think? What are your guys' thoughts on his announcement?
Go ahead, James.
Well, I mean, like I'm with you. I'm skeptical of politicians. I've seen we've lived it here so many times where politicians promise something, and of course, there's enough red tape that it just doesn't happen often, and that's the problem. It's a positive for our system, but it's also a problem in that he's hitting the nail on the head that our system has an issue with the way the money works, the central bank system and the printing money, and we have no basis for our fiat currency. This is something that Greg and I talk about all the time. There's nothing of value except the backing of it and the belief in it. And for us to actually go and switch over to, back to a standard where you have your currency actually attached to something like the BRICS have been talking about, it's a major undertaking. And quite honestly, there's not a lot of incentive for the system to change. And so you have both the red tape and little incentive for them to do this. So as much as I love to hear it, and I love to see it happen where we do switch over to a Bitcoin specifically backed currency, it's a pretty long road. And for a 4-year term for somebody, that's a long putt. Now, that said, I do appreciate the fact that he's putting himself out there. This will not be a popular narrative in the circles he runs in. So it's interesting to say the least.
100%. And by the way, Greg, I saw the picture with you and RFK. I think it was on Sailor's Vote. So how's the man?
Hodl Magoo says I need to take TRR to RTT or something to do with I have too low testosterone. My tits are too big. So fuck you, Hodl Magoo, but I still love you, kid. Look, at the end of the day, let's start talking about what was announced. The currency isn't going to be really backed by Bitcoin. They're going to put 1% of Bitcoin on the Federal Reserve balance sheet, okay? Very clear. So that's 1% more than they have already, but it's not a big number in terms of percentages. In terms of the size of the balance sheet, it's monumental. So if everybody in the world put 1% of their net worth in Bitcoin, the price of Bitcoin would be at least $500,000 US per Bitcoin, because 1% of global financial assets of 900 trillion is $9 trillion. $9 trillion divided by 21 million coins is, 450,000 to 500,000, basically the market cap of gold at 10 trillion, $9 to $10 trillion. So it's big. It's really big, but it ain't backing the currency per se. The narrative is important, though. The narrative is it's replacing sovereign debt as global reserve asset. Okay? That is the narrative. Everybody missed the narrative. The narrative is sovereign bonds are programmed to debase, and if you want to hold a valuable asset on your balance sheet, you hold the hardest asset ever created, called Bitcoin. And you can also throw in a little bit of silver, and to make Larry Lepard happy, you'll put a little bit of gold in there too. And you know what? You might put some of my mom's fine china in there, and maybe a piece of fine art, that's also a hard asset. It's the concept. It's the narrative. This is fucking huge.
Wow.
Is he going to win? Probably not. But the narrative is getting out there.
Yeah.
Central banks need to hold hard assets, not soft assets. What are soft assets? Bonds. What are hard assets? Gold, silver, commodities, oil. The best one, Bitcoin. Giddy up.
I love that. Always great to have Greg on the show. Always fire. I love that idea, and I want to get James' thoughts on that. It's the cat's out of the bag, so to speak. The narrative, right? Hard assets versus this fugazi that they're used to holding. Anyways, and then you could make the argument that that's responsible for all this chaos, and also taking the opportunity away from the younger generations. I would say, the whole system is just messed up. Anyways, James, do you have a follow up to Greg's excellent statement?
Yeah, no, it's a perfect point. That's the issue, and we saw over last year when Russia invaded Ukraine and we turned off their ability to use the SWIFT system. We seized their assets, we seized their treasuries. I mean, that's why you're hearing BRICS, the BRICS countries, that coalition talk about moving away from the U.S. Treasury as global reserve asset, because they need to have something they can have control of. And that's where they're talking about creating a currency that is backed by gold. Are they ultimately successful? No, but Greg is 100% right. The narrative is out there. There was a massive misstep by us to weaponize the U.S. dollar and the Treasury against a country. And so, as much as we need everyone to use treasuries and to use dollars, it was a major problem. It was a major misstep. And so, that's the narrative. Hold something that actually has value, hard assets, and there's nothing harder than Bitcoin.
Amen. And I think that will, that will continue to become more and more apparent. And it's not only RFK Jr., right? You had Ron DeSantis, governor of Florida, vocally came out against, their new scheme, which are the CBDCs. And I think that the CBDCs are a response to Bitcoin. And I think the CBDCs are their hopes, or their Hail Mary of wanting to keep that privilege of being able to create money for free that everyone else has to work for. And Ron DeSantis made it illegal in Florida, right? And and shout out to you, Greg, you have some Canadian politicians. I saw Pierre Poilievre's speech at the rodeo in Calgary. Amazing city, by the way. Wow. So he's...
Fill me in. I didn't see what you mean. So I'm not even aware. What did Poiliev say?
He said that he will ban cabinet members from from trying to pass a CBDC in Canada. And he was also he was very favorable towards Bitcoin as well. Yeah.
Well, let's just say that he has a direct line to one of my favorite Bitcoiners in Canada. and I'll leave it at that.
Okay.
And it's not me. Okay. I love myself, but the direct line's not to me. All right. So he's got some good back office support in his. Now there is a Canadian Bitcoiner who's in his party, and his name is Ben Lobb, Lobb. He's the member of parliament for an area called Huron Bruce, which happens to own or operate Canada's largest nuke. And Ben Lobb is dismayed that there are times when we as Canadians don't sell power cheaply to Americans. We pay them to take our power. Okay, I need to repeat that. This nuke has so much capacity and not the transmission ability out of the nuclear generator to the rest of Canada. There are transmission lines that go down to the northern peninsula of Michigan. And when there's not enough baseload demand in Canada and the nuke is still spinning, we pay Americans to take our power.
Yeah, it's important.
Good Lord.
Yeah, but Greg, and you're an engineer. Maybe you can tell people and explain to people why you can't just why that energy buildup in a nuclear reactor can be dangerous.
Dangerous like a fuse box, dangerous like, a piece of kindling, dangerous because when you're generating energy and it can't be distributed or dispersed, things go kaboom. So you got to pay our friendly Americans to take the power. Again, we don't give it to you guys cheaply, ask you for a nominal amount. We pay you to take our power. Don't you think we should probably have a Bitcoin miner? And Ben Lobb was at the Canadian Bitcoin Conference in Toronto, Ontario, sitting on a panel with none other than the nuclear Bitcoiner, a Canadian who works in Churchill Falls, Manitoba, or somewhere up there where Canada leads the world in this specific reactor called CANDU. And the DU stands for deuterium uranium or something like that. Canada deuterium uranium. And we're world leaders in this shit. And if we could get our act in gear and mine Bitcoin on the surplus energy from the CANDU reactors or on small modular reactors, holy moly. It's that simple.
It's really.
So anyway, bullish on nuclear mining. Yes, thank you. Is that you, Nico, that sent that out? So I'm trying to read the things. Yes, we're bullish on nuclear mining.
No, that was Opti. That was Opti.
Swan? Okay, Opti, thanks, brother. Listen, Swan Bitcoin, shout out to Alex Stancic, had a really good Cafe Bitcoin the other day where they brought on TeraWulf, right? TeraWulf is behind the meter nuclear mining, 2 cents a kilowatt hour, long-term power contract. Bitcoin mining in conjunction with nuclear energy capacity allows your IRR or your return on investment to be decreased over a period that typically takes 30 years. I mean, you know how expensive it is to construct a nuclear reactor? It takes about 30 years for you to get your return on investment back. But when you add in Bitcoin mining to balance the base load and to provide incremental revenue, your ROI increases and your payback period decreases. So I don't know, guys. I mean, you know that I love mathematics. I just wish more people would understand mathematics. And by the way, nuclear energy is quite clean. It's quite reliable. And there's this thing called the trilemma, right? For energy, it can be cheap, it can be reliable, or it can be clean. And you can't have all three. So cheap and clean, that's solar. It's bullshit. It's not reliable. You can have clean and you can have reliable. That's fucking nuclear, but it isn't cheap. Okay? And then you can have, I guess, what's the top one? It's cheap and reliable. That's Russia. Don't fucking work. Okay, cheap and reliable. That's fucking communism. Okay, so you can only have two, but you can't have three. Okay, so that's the trilemma of energy.
It sounds like Bitcoin fixes this, and I completely agree. Before Bitcoin, there was no buyer of last resort, right? Just and I think a lot of people have this misconception, and I honestly blame the legacy media for a lot of this, right? Where it's like Bitcoin uses more energy than the country of Denmark. But they don't tell you the nuance. What energy is it using? It's using stranded energy, because if it wasn't stranded energy, it wouldn't be economical for the miners to use it in the first place.
And by the way, let's call it out for what it is. It's more important than the country of Denmark as well, okay? You guys fuck off, okay? Like, just fuck off. If you don't understand that there's some countries in the world that are less important than Bitcoin, you got to understand the GDP and the construct of what Bitcoin is bringing to the world. I love Dutch hockey players and Dutch figure skaters and Dutch.
Now the speed skaters. The speed skaters are pretty phenomenal.
Speed skaters are fucking amazing.
Right?
But listen, Bitcoin's more important than all of them. And props not as important as the farmers in Netherlands, but they don't seem to matter in the Netherlands. They're just going to plow all those fields over and, create immigrant fucking housing instead of farming. Like, I mean, come on, guys. You got to do the math. And Bitcoin is more important than many small countries in the world. Why? Because it's going to add way more GDP, global GDP, than that individual country is going to add.
100%. And I just want to mention this, by the way, Greg, because you said that comment about Denmark. That hashtag that we put on screen for our audio listeners, this is Unplug Denmark, is a hashtag that Opti came up during the live show. And I actually gave him crap for that. But now that you've said it, Opti, I was wrong and you were right.
I think I said, okay, sorry, was it Denmark or Netherlands?
Denmark.
Doesn't matter. I always heard it was Netherlands.
It was Denmark. The media says Denmark.
Even worse. Well, okay, I've heard Netherlands. Denmark is still even bigger rounding error. Like, fuck off, you guys. Like, it's Canada doesn't matter. Pretend that Canada matters. You're losing your mind. There's only a few countries in the world that matter. So Bitcoin shouldn't be more important than like the USA, but it certainly is more important than 150 of the 170 fiat countries out there. That I guarantee you. And so therefore it should use more energy.
Yeah. Yeah. And so there's that argument. And then there's the again, like Bitcoin isn't using, you can't set up a mining operation in New York City. Like it's not economical. Bitcoin miners are going to go to where there's cheap energy. And if there's cheap energy, it's because there's an excess capacity, right? Anyways, James, I want to pivot and I want to ask you this question. I want to take advantage of the fact that you guys are both here because this was a huge news and you guys have a tremendous amount of experience between both you guys. I hear Foss in my head when I wake up in the morning, 30 years in a wrist chair. But anyways, okay. What are your guys' thoughts on BlackRock, the BlackRock ETF? Because I had Larry and Caitlin Long on yesterday. Okay. And Caitlin Long basically said that she's like, it's a big nothing burger. And I'm like, why is it a big nothing burger? She's like, because I'm afraid of rehypothecation. So I want to get your guys' thoughts on that. Like, what are your guys' thoughts on the BlackRock ETF? James, I'll start with you.
Yeah, I mean, it's definitely a risk long term, the rehypothecation, using that asset to then lend out. And we've seen issues in the big banks of this for gold, for instance. It's been a problem. But short term, look, the institutions are coming. It's just reality. It's what it is. They're coming for Bitcoin. They're getting more comfort around it. They're getting more understanding around it. And the big thing is that you have massive amount of consumer interest around Bitcoin in particular. And that along with the sightline of getting some sort of regulatory clarity around it is giving these big companies comfort that they can get into it. It lowers their personal risk. It lowers their reputational risk. and they can get on board and start offering this. When BlackRock has an ETF, it's not going to be BlackRock buying it. It's not going to just be BlackRock and their funds buying it. They're going to be offering it as an ETF to the street, which means that the important part about this, and this is the part that everybody kind of focuses on, and it is important, is that it's an easy on-ramp for investors who have not been able to get into the space yet to be able to buy Bitcoin without worrying about all of the issues that come with buying Bitcoin if you're in a small institution. What's a small institution? Well, that's like a small family office or a mid-sized family office that doesn't have the capability or the they don't have the comfort around custodying their own Bitcoin, their asset. And so as fiduciaries managing this family office of money, they can't just go out and buy Bitcoin and then let it sit at Coinbase and feel comfortable around it. They can't go and buy it and then self-custody it, put it in a wallet and feel comfort around that themselves. It feels too risky to them. They don't understand it well enough to do that. And there's a lot of hurdles to get over that. When you're an institution, and I've talked through this before, you have to go through a chain of approvals in order to buy Bitcoin as a separate asset class. What do I mean by that? Well, you start out with a portfolio manager who has interest in this. Say one of the analysts comes and brings a portfolio manager this idea, says Bitcoin, shows them all of the Sharpe ratios, how it lowers the long-term risk of the portfolio, raises the risk reward of the portfolio, and it's compelling, and they understand it as a separate asset class. And the portfolio manager says, okay, that's great. I understand it. I want to buy it. So what does he do? He goes to the chief investment officer and says, I think we should be buying Bitcoin. And the CIO says, whoa, wait. There's a lot of risk around that. You've seen what has happened with this, the meltdowns of these exchanges, the fraud, the nefarious activity. We've got to pump the brakes here. Let's go through the proper approvals and make sure that we're doing this the right way. When he finally gets on board and he understands it and he says, okay, I believe I agree with you, we should do this. Well, then they've got to get their compliance on board. And compliance means their chief compliance officer or their general counsel. And that means that they've got to get everything in order. Who's going to buy it? Where is it going to settle? How are they going to pay for it? Where are they going to custody it? Who's going to be control the keys and the custody of it? Those are all the things they've got to get. It takes a massive amount of brain power and time to get through all of that red tape to get the approvals for these institutions to finally do it. So when you have small family offices, registered investment advisors, the RIAs that want to buy it for their clients, that want to buy it for their customers, they can't because their hands are tied. They literally cannot do it. But when a ETF comes out that's a spot ETF that actually has the underlying asset that's attached to it, that's easy. They can go on the New York Stock Exchange or a NASDAQ, buy it, settle it at their prime broker, done. It's in their client's account. It makes it a huge superhighway on-ramp for that kind of capital. That's the front end of it. The back end, Greg, you can talk about rehypothecation and some of the dangers that can come with it, but that's the front end of it, in my opinion.
And Greg?
Okay. Yeah, that's great. Here's everything James says, summarized in one, I guess it's a word. It's called QSIP. And every single financial asset in the world has a QSIP if it's traded by an institution. But Bitcoin doesn't have a QSIP in the United States. And to put a QSIP on Bitcoin via a BlackRock ETF that does all the things that James talks about actually allows Bitcoin to be integrated into the portfolios of these institutions so that it's simple to monitor. It's simple to isolate your risk, measure your risk, put it in something called NakamotoPortfolio.com, which is Alpha Zeta's, Swan Bitcoin's CIO, about how it's going to improve their portfolio returns at the same time as decreasing portfolio risk. I mean, that's the optimal thing, right? So That's all, everything James said. So yes, that's true. Okay. Rehypothecation. Has anyone ever audited the total supply of gold? No, you can't. There's so much gold out there that people don't even know whether it's actually tungsten, painted gold, or how much gold is in Fort Knox, that you can rehypothecate this blind ledger easily, to the point where JP Morgan is something like short more than, I don't know, I saw something like close to 75% of the market cap of gold via the GLD. Like, okay, that's rehypothecation. In pure buying and selling, lending, assuming all the BlackRock shares, ETFs were borrowable, you could lend out 100% of the BlackRock ETF. Okay? If all of the shares were borrowable, which means there's 2 times the supply in the BlackRock ETF. But that's it, because it is auditable to the Bitcoin that BlackRock has to hold on their balance sheet that is real Bitcoin. It's not fake Bitcoin. So I am not concerned about rehypothecation. Yes, it will happen, but compared to the other advantages of creating on-ramps that'll eventually lead to self-custody of Bitcoin when these guys figure out that's the way to hold your keys, I'm quite bullish on it. I'm so bullish that I'm going to tell you how much Bitcoin is going to, how much demand is going to flow into the US market in Bitcoin. You want to know the number?
Hit it with us, Greg.
50 billion.
Holy crap.
Why? Because in Canada, where we're 1/10 the size of the USA, 5 billion flowed into the market. Math. 50 billion.
Yeah, and I would
That's
say
1/10.
I would say that's even pessimistic, right, Greg? Because the U.S. market has buyers from all over the world that are focused on holding assets here in U.S. dollars because they want to own dollars, right? So
that being said, there was also, James, sorry to interrupt, there was also U.S. buyers of the Canadian
sure, yeah,
spot
absolutely.
Too. So look, I'm trying to be a big shot here. I've had a long day. You know, like it's 5 p.m. I haven't even had my first Molson yet. This is getting tough to sit through this. And I love Caitlin Long, by the way. She is absolutely a rock star. But I perhaps disagree with her on this point. I think the positives far outweigh the negatives.
Yeah, I think it's going to be huge.
I wonder what Larry Lepard said. What did Larry say?
Larry was also, you know, Larry loves gold, right? And he was also not as much as Caitlin, but by the way, for anyone who's
he's too polite. He just didn't want to disagree with Caitlin. He gets it. Gold is a farcical ledger compared to Bitcoin. Okay.
Yeah, so the thing with gold is you could just issue paper. You don't have to actually have it audited like you do in, you know, the
correct. Yeah. 21 million Bitcoin, guys. And if all of the Bitcoin in the whole world were borrowable, there'd be 42 million. Okay. That's not all going to be borrowable because most of the Bitcoin is tucked away. That's how it works. Okay. I'm so sorry. Like, I guess I shouldn't have, had that extra TRT injection or whatever fucking Hodl Magoo wanted me to do. So,
Oh man. By the way, guys, for anyone who's interested and curious as to why the Caitlin and Larry episode is pre-recorded, so that drops on Saturday. So this is a pre-show before that show. Anyways, gentlemen, okay, interesting. You guys feel bullish about the BlackRock ETF. I do as well. But I also look at BlackRock and their support of the whole ESG thing for a very long time. Also, we know that Larry Fink had his thoughts on Bitcoin, saying basically it was just for money laundering. And it's just funny because on CNBC a couple days ago, and I'm sure you gentlemen have seen this video, he's like, this is going to become an international asset. And I was like, holy crap, I can't believe we are here in the movie. So anyways, I want to get your guys' thoughts on that.
It's good for business.
James?
Yeah, go for it. It's good for business, but go ahead. Yeah.
BlackRock endorsing a Bitcoin ETF essentially throws out their ESG narrative against Bitcoin. And in fact, did you guys see the MIT study that showed how valuable Bitcoin is to the environment? Actually, Bitcoin mining, rather. So I think that the BlackRock endorsement of a Bitcoin ETF doesn't mean they have abandoned ESG. It just means that they don't believe Bitcoin is ESG unfriendly. I don't know. I never thought it was ESG unfriendly. A lot of New York Times and Greenpeace knuckleheads think it is, but it isn't because they haven't done the work. And then what was the second one? The first one was ESG. What was the second one?
The second one was he said that Bitcoin is, and this was in 2018.
Oh, money laundering.
Yes.
Yeah. Money laundering. Okay, come on, guys. Let's remember what the biggest currency in money laundering is in the world. And I'll leave it there. Over to you, James.
Yeah, it's true. Yeah. I mean, like he knows the reason they're saying this because they have customers who want it. You know, they understand what I just said, that it's extraordinarily difficult and it takes a very long time for all of, like if you're an RIA, if you're a registered investment advisor, you've been wanting to buy. I've talked to IRAs who are like, I want to buy Bitcoin. I cannot do it for my clients. I can't do it because I don't have the function to do it in a way that I can prove I've fulfilled my fiduciary duty for them. And so he understands that. And we're getting to the point now where it's just undeniable. And when we're at that point, well, they're going to push the SEC over the edge, and they're going to get to a spot where the SEC has no choice but to concede and say, okay, you fulfilled the requirements for oversight. You can use Coinbase as the custodian, and we're gonna go ahead and move forward with this. And at that point, it's like Greg said, the floodgates open, and you're gonna have $50 billion pour in, and that to me is going to be the start.
The start of what, James? The start of what?
NGU.
That's right, NGU. Yeah, and you know, I mean, it's going to be the part where it becomes a separate asset class that every institution has absolutely no argument against allocating to. And what Greg had pointed to before, the Nakamoto portfolio. This is really important for people to understand, is you could plug in Bitcoin in any type of portfolio and see where it pushes your portfolio out on that risk reward curve and enhances virtually any type of portfolio you've owned since Bitcoin was created. And it's super important. And once portfolio managers, they grab onto this, they're not going to let go. And it will be an allocation that will take the place of an allocation to bonds, period.
Yeah. And also shout out to Hoffa for.
Yeah, Hoffa is amazing. Can I just say, James, 100% agree. Yeah, isn't that cool? The Schrodinger model and everything. But 100% agree that it should come, the allocation should come from the bond portfolio. It won't replace bonds, right? I mean, bonds are the world's largest asset class. You know that. I just want to make sure viewers understand. Let's play some mathematics, okay? If total global financial debt is 400 trillion, and 1% of that debt got allocated to Bitcoin, that's 4 trillion of allocation, which is 4 times the size. Oh, excuse me. No, about 8 times the size of the current market of Bitcoin. That's 1% of the allocation of the total global debt. Wow. This is why the numbers are so asymmetric. Okay. And
remember, we've talked about it before. There's only a handful of funds who control $30 trillion of assets, right? And BlackRock is one of them, right? So you've got BlackRock, Vanguard, UBS, Fidelity, and I think State Street and Morgan Stanley are kind of like right on top of each other. But that's $30 trillion of assets right there. between them. So BlackRock gets on board, Fidelity gets on board, State Street gets on board. When they allocate separately to this, it behooves everybody to. You can't have your neighbor portfolio manager. Like, hedge funds all talk to each other. That's why it's so difficult for hedge funds to make money these days, is because they're all in the same trades. You know, they're all on top of each other. And so when you have asset managers that are so big that are getting into it on the front end here, then you have not just the asset managers looking at it as a separate allocation, but then you also have the treasuries of these large corporations looking at it. And whether it's Microsoft or it's Apple or whoever, they can't deny it anymore. They're going to have to consider it. And once they start considering it, they're going to have to consider it, you know, in their own terms, and ignore all the nonsense and the noise from the media, and dig into it as a separate asset allocation themselves, because it's that important to them to protect their own capital. And that's what's important here.
Yeah, and you know, and I agree with you, with you gentlemen. The next cycle, I believe this is going to happen, because I think we're going to reach a point where, on the public company level, Michael Saylor's big bet is going to be like, it's going to be undeniable at that point that he made the right decision. And then on the nation state level, also, with Nayib Bukele's decision with El Salvador, it's going to become undeniable. There's no amount of legacy media spin, New York Times doctoring photos and all of that stuff that is going to be able to obfuscate what, to use Greg's words, what the math is. So yeah, I'm really, really excited for the next cycle. Now, I want to get you guys' thoughts on this. I believe the last cycle was cut short for two reasons. I think that a lot of paper Bitcoin was being sold with FTX and all that stuff that was going on there. But I also believe with the primary reason is the CCP mining ban. And that literally happened in the middle of the last Bitcoin bull run. And you'll see the hash rate and the price literally directly correlated, as if they're tied together. And I believe it brought down the price because those miners needed to sell Bitcoin in order to relocate to more friendlier jurisdictions. So I guess my question is, do you believe in the theory of the diminishing returns theory? Are you know, the best opportunities for Bitcoin behind us? Are we still in the beginning phases of this? I know, Greg, you touched upon this earlier, but I just want to get your thoughts on this, because my belief, my spidey senses is telling me that I think that the next cycle is going to really surprise people, maybe not to the downside like last time, but perhaps to the upside.
Yes. Is that enough? No. Okay. So yes, I agree with you, because Bitcoin has to attain a certain market cap in order for it to be able to be invested in by the biggest funds in the world. Okay. Because if Bitcoin is a micro cap asset, the biggest funds in the world can't put even 1% of their asset base into it without absolutely causing that price to skyrocket. Nor would they want to put even less than 1% in, because you probably don't allocate an analyst's time to this asset class if you're going to put less than a 1% allocation. So, you know, I'm not sure if you guys know who Worth is. He's WORTH on Twitter. I can't remember what his handle is, but he used to be he's from Arkansas, portfolio manager, lots of years in the market like me, long, short equity guy. Alex Stancic, this is my second shameless plug for Alex, I think, on your podcast here. Stancic says to me, he goes, Foss, what do you think the market cap of Bitcoin needs to be in order for it to get really big money involved? And I said somewhere around where we are right now, 500 billion to up to 4 trillion. Like, once it reaches 4 trillion, all of the biggest accounts in the world can get an allocation without materially changing the price, or more importantly, they can get an analyst's time in there. to analyze this investment. So my answer was between half a trillion and 4 trillion. Worth answered with a number, if I'm not mistaken, which was 5 trillion. And so there's two opinions of people who think that you need to attain a certain market size in order for the biggest money in the world to get a proper allocation to it for liquidity and analyst time. And then once they get that allocation, they tell two friends, and so on and so on. And all of a sudden, Bitcoin becomes a standard holding in all of the portfolios around the world, which allows it to go from less than 1% of total global financial assets, right? We're actually at less than 1/10 of 1% right now. It can go from 1/10 of 1% of total global financial assets up to 5%. Okay? That's a 50 bagger. Easily. Now you could say, damn, I missed Bitcoin going from 1,000 to 30,000. But guess what? It can still go from 30,000 to 1.5 million. And it's the same 30 bagger. In fact, no, that's a 50 bagger. So it's because the market grows, and it's the law of big numbers. And when the market gets big enough for the big money to get in, you can see the same types of returns as you saw when it was a micro cap. So I'm not that concerned that the biggest returns are behind us. What I may say is the volatility will decrease, but I don't think the price appreciation opportunity has decreased at all. But yeah, maybe the volatility has decreased. So that even brings more money into the fold. I don't know. Bitcoin doesn't care. At the end of the day, it's still so stupid cheap. I'm not going to argue whether the last cycle was cut short or anything like that, because we're dealing with rounding errors here, Nico. Yeah, someone just said at 500,000 is cheap. It is, because I think it's going to 2 million. In today's dollars, 2 million. Am I right? I don't know. But I'm at a much higher certainty than the market odds are giving me right now that I'm going to be right. So, yeah, you can get those returns. And that's the asymmetry of the trade or the investment. And that's why everybody needs that exposure.
100%. And James, do you want to follow up that?
Yeah, I mean, something that Greg said, I agree with all that. But something that he said at the end there that's really important is in today's dollars, $2 million in today's dollars, which we're all dollar centric and we're all just thinking about US dollars. And I do believe the dollar will be the last one standing, or one of the very last ones standing. But something else to think about is it's not just US dollars that this is, think about the people in Venezuela who are experiencing 80, 100% inflation, Think about the people in Lebanon who can't even get their money out of the bank. I don't think they're not thinking about this as a trade or an investment. This is like a lifeline for them. They need to be able to have an asset that they can hold on to, take with them anywhere in the world, and it still retain its value for the work that they've put into the world. They've been compensated for that. They need to be able to keep that. It's completely unfair for them not to. And so this gives them that ability. So in their terms, I mean, the best returns may still be ahead for them.
Yeah.
Yeah. Wow. You guys have me feeling really, really bullish right now. Anyways, all right, gentlemen. So we talked about BlackRock. We talked about the idea of the diminishing returns theory. Now I want to talk about something that goes both of you. You guys are special. You guys are specialists in this concept, right? And this is a question that I always get from some of our viewers. And it's this concept of the debt spiral. Are we seeing it play out in real time, even with a so-called conservative government in the United States? They couldn't help themselves but to raise the debt ceiling once again. So it to me, and remember, like the whole political charade, because it was like, no, we're going to stand our ground. We're going to not do anything. But I'm looking at it from the outside in, and of course, I'm not as experienced as you two gentlemen. And I'm like, this is a joke. I don't think they have a choice they don't have a choice but not to raise the debt ceiling, because if they don't raise the debt ceiling, the whole system collapses upon itself. I want to get your guys' thoughts.
Nico, here's a secret. There is no debt ceiling. That's the secret. And everybody knows
James is going to have a great answer, so I'm going to go even more quickly, okay? See, the funny thing is, debt or interest expense compounds, right? And therefore, it's what's called an exponential function. I need you guys to do some math here with me. An exponential function looks like this, right? It's a parabola. And why is it an exponential function? Because the present value, the future value is calculated as the present value times 1 plus R, which is the discount rate or the 10-year US Treasury rate for a number, to the power of n, the number of years that this has grown. So when you have something to the power of n, you fucking knuckleheads, that's called an exponential function. An exponential function looks like that, which means the debt was growing on a relative basis the same in the past. It's just that the debt burden was so much smaller. Now, all of a sudden, it's hit a point where the interest expense is $1 trillion. That's the number that's opening people's eyes. It doesn't matter. Yes, it has accelerated because it's called the second derivative, the rate of change, okay? But it's all mathematics of a debt spiral because interest expense compounds. End of class. That's as simple as I can lay it out. If you don't understand what I just said, go back to grade 11 math and listen for a fucking change, okay? Mathematics is important. And if you don't understand how a debt spiral works, you can become the Prime Minister of Canada or perhaps Joe Biden, okay? Because those guys have no clue about exponential functions. I am certain of that.
Christine Lagarde can be put in that camp too. So and the answer is we're in it. We're already in it. There's no way out. We just like Greg said, we operate in a perpetual deficit, and we have to fund that deficit with additional treasuries. And the problem is right now we're trying to battle inflation, and so you've got the Fed raising rates in order to battle inflation. And it's causing the interest expense on that debt to go higher. And so you have to borrow more money every year in order to pay that down. And you've got half the debt it's maturing over the next 3 years or so. And so you're seeing the expense just go through the roof. And we just saw it with what you talked about, Nico, the debt ceiling being raised. Well, what they did is they just eliminated it basically, and they said, okay, we're not gonna approve any more spending, but the Treasury can issue as many bonds as they need to cover all of the expenses we have, which are quite a bit, obviously. So now the issue is that as they issue more debt, and they had to go back and fill the Treasury general account, which was down to just a $30 billion, which they can spend, before we even have our first cup of coffee in the morning. Well, that TGA account had come down from about $500 billion. So they had to fill that back up. Number one, they had to pay for all the debt that was maturing in June. Number two, they had to pay for all the intergovernment tabs that they ran up because they used extraordinary measures to avoid tripping the debt ceiling. Number three, so you saw the Treasury issue $1 trillion worth of debt this past month. And so it went from 31.5 trillion to 32.5 trillion in just a few weeks. And so why did that happen? Because of what I just said. And because of what Greg is saying, is that the cost of doing business for the United States is getting higher every single year. And so we have to issue more debt. And so we're in this spiral that we just can't get out of. And so Will the U.S. collapse today, tomorrow? No. Will we get out of it? No. Will we eventually collapse? Yes. Period. It's just it's just there's no way around it. There's just too much debt. You can see in my pinned tweet, I've got a thread of all these different things I've talked about. But in that debt spiral 201, the second one I talked about, the U.S. Treasury itself put out a chart. It's a visual, and it was in this report that they issued maybe 5 or 6 months ago, and it was called an unsustainable fiscal path. And basically, what it's saying is that the Treasury is trying to tell Congress that they can't keep issuing debt like this, and yeah, keep going down. It's down a little bit, but what? Yeah, keep going. There you go, second one. So, and in there you'll see that there's this chart, and what Greg is talking, what's important about this is this chart in and of itself is astounding, and it's mind-boggling that it's this bad, that they admit to it. But the important part is that this chart just shows a straight line increase. Keep going. That's an important one too. You can see how it's just growing bigger. The deficit's growing bigger. The debt is growing bigger. Keep going, and then keep going. And then this right there, they admit that it's out of control, but that is a straight line. And what Greg is talking about, and what they don't admit to, is that line is going to go parabolic, and that's the problem.
Oh, so they're admitting to this already being excuse my language, but I'm gonna say they're already admitting it for this to be an absolute clusterfuck. But this is gonna be a parabolic clusterfuck.
Yeah,
is what you're saying.
That's optimistic. It's not going to happen like that.
600% of GDP. Well, it looks good on a graph. Do you think it actually works? I don't know. I doubt it, but
oh god,
you know.
Oh god. Well, and it all stems by their ability to print. I know, with the bonds and the Fed and all that stuff, but if you just simplify for the sake of the show, right? It all stems from their ability to just print money. It really stems from that, and
that's right.
And that's how they pay for everything. And they have basically an Amex with no. It's a kid with an Amex with very wealthy parents, and the Amex has absolutely no limits.
You remember when you got your first checkbook? You may not have because you're too young.
No,
Greg,
no.
Remember when you got your first checkbook?
I'm not that young. I remember.
I can write checks forever. I can buy anything.
Yeah.
Oh, I got to have the money in my account for this? Oh, okay. Yeah. But, the issue here, Nico, is, and here's a sobering issue, is we're crowding out the marginal balance sheet that can take on this debt. That's the problem. And so what you've seen in the last month, what we did is we issued about $1 trillion worth of debt, and we drained a lot of that, the difference between the debt that was maturing, that number, which was $400 billion, and the amount that they had to issue on top of that. So debt matures, investor gets cash back, they plow it into more debt, right? But there's still a VIG there, right? There's a difference, a delta there between what they need to issue, which is $1 trillion, and the amount of debt that was maturing that they need to reissue. Okay, right? So think through that. The debt matures. The Treasury doesn't really have enough money to pay for that, so they issue more debt to pay for that, and then that debt that matured, that investor gets capital back. He plows it into that new debt, but they still have more debt that they have to issue. So where does it come from? It came from the reverse repo market. So they're soaking up that. But once that's gone, it's not like China and Japan are rushing out there and Russia are rushing out there to buy our treasuries anymore. They're not. And so you've got these balance sheets of these corporations and investors, worldwide investors. You've got State Street. You've got, CalPERS. You've got Texas Teachers. Once they can't buy any more debt, once they're crowded out, who's going to buy it? Well, they're going to print money and buy it. They're going to print money, put it at the Fed. The Fed's going to go and have the dealers buy it. The Fed's going to buy it from the dealers, give them the cash that they were just given. And it's just a whole charade. And that's the way it's going to happen until it doesn't.
So, and it's interesting that you say that, because in earlier, Greg, you said that, treasuries and bonds were always going to be a staple, but if we know it's BS, why do you believe that they're still going to play such an essential role
Well,
in?
it won't turn off. It won't turn off overnight. And secondly,
Okay.
as long as people continue to accept newly printed money as payment for their old money, the
Gotcha.
system continues. So I like to say that the printing quantitative easing infinity is the error term that solves the debt spiral. Like, the debt spiral can go forever as long as people accept their debasing currency as payment for the maturing debt. Okay. And by the way, James is totally right. But when you're running an 8% annual fiscal deficit, 8% of GDP is being added each year because that's the fiscal deficit, because you're not bringing in enough revenues. Not only are those old bonds being refinanced with new bonds, 8% is being added to the deficit because the government has more expenditures than it has revenues annually. So that means the debt itself will just, without compound interest, will double in less than 8 years. Okay? Or 10 years rather, 8% in 10 years. So look, fiat printing is the error term that solves the debt spiral. But it's always been the error term that solves the debt spiral. That is how fiat Ponzi economics works. And it works for a long time in countries like the USA, but in countries like Venezuela, people eventually go, no more, or no mas.
No.
I don't accept it anymore. And I throw the currency to the corner because it's not worth anything, to the curb.
Nico, bring up the usdebtclock.org.
Oh, you got it.
And scroll down to the bottom. This is the part that Greg likes the best. Greg, you want to talk through this one?
Sure. I mean, we're almost at the end of the podcast, but it's a good place to end. So usdebtclock.org. Okay. Pull it up, Nico.
Yep. I'm working on it. There we go. Boom.
So it's delayed on my screen a second. Okay. So you see the top right hand, or the top left-hand side, that's your total national debt right there. 32 trillion, right? 32.5 trillion. It was just 32 trillion. We've put on $500 billion in, a couple of months here.
A couple of weeks, yeah.
Okay, so that's 32 trillion. It will be 50 trillion by the year 2033, by the way. Okay, so that's only mathematics. But here's the cool thing. Go down to the bottom right-hand corner, Nico. Okay, now expand that. That U.S. unfunded liabilities, that's the real number, people. $192 trillion. That people are counting on for Social Security, Medicare, and Medicaid. And they may get it, but the only way they're getting it, I hate to tell you people, is they're going to have to print it, which means the value of each dollar is going to continue to debase.
We'll get it, but Gen X will get it, but it's not going to be worth anything. Yeah.
And it's not, they may not get it because sometime the money printer may break or the world will not take that money anymore. But let's assume it does. Fiat debasement is 100% certain. So let's not complicate things. If you know something is 100% certain, how do you protect against it? You own hard assets. So real estate, gold, oil, commodities, we mentioned that. But what's the best one? It's called Bitcoin. It's 6 p.m. Eastern Canadian time right now. I need to run to a dinner. I'll let James summarize the simplicity of grade 11 math for you, but I think you get the picture. This is the simplest trade or investment I've ever seen in my life. And if you own zero, go become an actor, work on some stupid fucking show, and then go on CNBC and look like a total retread when they say, I only had to read 20 pages of the Fiat Standard to understand why Bitcoin matters. And that fucking loser well, it's called scarcity and scarcity. He doesn't even understand the difference between Bitcoin and crypto. Okay. Ben McKenzie, learn fucking mathematics. Okay. Peace and love from Canada. I got to run. Thanks,
Love
guys.
it, buddy. Thanks, Greg. Appreciate it. James,
yeah, that's
you want to add to that before we wrap it up?
I'm just gonna summarize it. The only wrong allocation of Bitcoin is 0. You know, I can't tell you how much you should have because everybody's different. Every single person's portfolio, personal situation, income, needs for cash is different. It's a volatile asset, but you should have more than 0%. That's it. Period.
Amen. I think it's I think that's conservative. For my generation, I'm, it's for me.
Yeah,
it's,
you're young. You could have 5, 10, 20% and still make that up later. It all depends on your risk profile, your risk appetite, and what you feel comfortable with. If you're my age, and it just depends on what your needs are, whether you've got high cost of living, whether you've got kids you have to pay for, whatever. So, but I love Greg. He's super colorful, but the point, his points are rock solid and spot on, and that's the important part.
Yeah, and Greg's a great guy, and so are you, James. And I really appreciate you joining me today on Simply Bitcoin IRL. Always an honor and a privilege to have you on the show, and I really, really enjoyed this conversation a lot. So really appreciate you, man. Will I see you at Pacific Bitcoin?
Absolutely. Yeah, I'm speaking. I don't know when or what, but yeah, I'll be there. So
awesome.
100%.
Awesome.
Thank you for having me. I appreciate you doing this show, Nico, and everything you do. So appreciate you guys, what you're working on, you and your team. So thank you.
Well, I appreciate it. And of course, the show wouldn't be possible without Opti. James, thank you so much. Appreciate it. See you in California. Anyways, guys, thank you so much for tuning into Simply Bitcoin IRL. If you enjoyed the show, you know what to do. Smash that like button. Consider subscribing. And if you feel, you could tune into the live show tomorrow. But until then, peace out, guys. I'll see you later.